They're ditching the hype, walking away from the flashy Instagram NFTs, ignoring the crypto bros yelling, "to the moon." And no, they're not buying up Bitcoin this time. While retail investors chase trends, real millionaires are quietly moving their money into three key places that you probably haven't even considered. Places that don't make headlines, places that don't crash overnight, and yet these very places are quietly minting more millionaires behind the scenes than meme stocks ever did. Welcome to the three investments the wealthy are swearing by this year. And nope, crypto's not on the guest list. Let's start with a reality check. In 2021, everyone wanted to be a genius investor. You bought Dogecoin? Genius. Flipped an NFT for 10x? Genius. But fast forward to now, and the wealthy are playing a completely different game. They're not gambling, they're not hoping, they're moving their cash with surgical precision. Because real money doesn't chase hype, it flows where returns are consistent, protected, and scalable. So what are these three low-key weapons of the ultra-wealthy in 2025? Let's break them down, one by one. And warning, the third one might just make you rethink how you handle every dollar you earn. Investment number one, private credit, the bank killer. Let's talk about the one investment that's exploded in silence, private credit. Also known as shadow banking, this is where the rich act like the banks. They don't deposit cash into banks to earn 1.5% interest. They become the bank and lend directly to businesses, real estate developers, and private deals. Think about it. While traditional banks tighten lending rules and regulators breathe down their necks, companies are starving for capital. That's where private credit steps in. High net worth individuals and private equity firms are filling the gap, offering capital with flexible terms, and in return, they're earning yields between 9% to 14% annually, often secured by real assets. Private credit isn't new, but in 2025 it's booming. Why? Because it's the antidote to market volatility. It doesn't swing like stocks. It's backed by legal contracts, collateral, and recurring payments. For millionaires, it's the holy grail, stable cash flow without the drama. One insider described it as earning like a landlord without dealing with tenants. And it's not just for billionaires anymore. Investment platforms are starting to open access to accredited investors with as little as $10,000. But let's be clear, this is not risk-free. Private credit requires due diligence. If you pick a shady borrower or don't secure collateral, that yield vanishes fast. But for those who understand underwriting and structure deals well, private credit is quietly outperforming stocks, especially in this higher rate environment. So why are millionaires all in? Because they're sick of volatility, and private credit gives them something Wall Street can't: predictability. Investment number two, strategic farmland, the new gold. Imagine owning an asset that feeds the world, that rises with inflation, that produces income even in a recession, that's not tied to stock market tantrums. Welcome to farmland investing, aka the rich person's retirement cheat code. While retail investors were chasing tech stocks and flipping digital apes, millionaires were buying cornfields, almond groves, and cattle pasture. Because farmland is not just dirt, it's cash flow in disguise. You lease it, you harvest it, and the land itself appreciates over time. Here's the kicker. According to USDA data, U.S. farmland has appreciated over 10% per year on average over the last decade. And that's before rental income. Add another 3 to 6% annually from leasing, and you're looking at double-digit returns. Quiet, durable, tax-efficient. But here's what really makes farmland sexy to the rich. It's uncorrelated. When tech stocks tank, farmland doesn't care. When inflation rises, crops become more valuable. When markets panic, people still need food. And the ultra-wealthy know that in a chaotic world, food-producing land is the most underappreciated insurance policy there is. Some millionaires are even turning farmland into carbon credits, earning money by letting land stay untouched or farmed sustainably. That means you're getting paid to literally grow nothing. And it's not just cornfields in Iowa. Vineyards in California, olive farms in Spain, mango groves in Colombia. Millionaires are going global with it, hedging currencies, diversifying climates, and locking in generational assets. The only problem? Farmland isn't easy to buy directly. It's not like shopping on Zillow, but platforms like AcreTrader and Farm Together are changing the game, offering fractional ownership in curated farmland portfolios. Bottom line, while your average investor is still gambling on TikTok stock tips, the wealthy are earning 10–12% returns from the ground beneath their feet, literally. Investment number 3, media royalties, the passive income secret weapon. Now get ready for this one, because it's the most slept-on investment in 2025, but it's got millionaires flocking to it like sharks in open water. We're talking about media royalties, owning the rights to music, films, TV shows, even YouTube channels, and getting paid every time they're played, streamed, or licensed. Sounds wild, right? But here's how it works. Let's say you buy the rights to a song. Every time it's streamed on Spotify, used in a commercial, or played in a movie, you get paid. You do nothing, and the checks keep rolling in. And we're not talking pennies. Top tracks and shows generate thousands per month. Even niche catalogs produce steady cash. One buyer paid $30,000 for a 90s sitcom intro and made that back in 2 years just from reruns. Others are buying podcast rights, TikTok music samples, and even retro cartoon clips. But here's the power move. Media royalties aren't just passive, they're inflation resistant. As prices rise, so do streaming rates and licensing fees. Plus, they're non-correlated to the stock market, making them a dream for diversification. Big players like Hypnosis and Primary Wave have been buying entire catalogs from artists like Justin Timberlake and Bob Dylan. But now, smaller investors are joining the table via platforms like Royalty Exchange or Songvest, where you can bid on fractional rights. And this isn't limited to music. Some are investing in audiobook royalties. Others are acquiring voice AI datasets. It's not just art, it's intellectual property with built-in income streams. One investor described it as owning mini ATMs that play sound instead of cash. And with content consumption only growing, media royalties are becoming the modern-day oil wells. No tenants, no toilets, no trading charts, just residual income, flowing in month after month. Subscribe for weekly deep dives into how the rich actually build wealth.